Hey, what is up YouTube? Welcome back to the channel. So for today's video, if you can't already tell by the title and the screen right now, I will be sharing part of my strategy that I use to be able to trade. So throughout my entire journey on the internet for the past couple of months, I have received a lot of comments and DMs to go over the strategy that I use. Now, the only reason why I haven't shared it up until this point, the most revised version, is because honestly, I'm still kind of tweaking it to be able to use it that best works for me. And also, by no means am I a teacher or anything like that. I've only come on YouTube to actually share my journey. And if you're able to follow along some of the challenges I've done, I do kind of explain my thought process behind those trades by implementing my actual strategy. I don't have like an actual educational video or educational course because again, I'm not claiming to be a teacher, but only because a lot of you have requested this. I felt like, okay, maybe it's time I do this just for the sake of, the audience and being able to share a little bit more specifically of what I actually use. So again, this is only part of the overall strategy, but pretty much the foundation of it. And my foundation of my strategy falls on supply and demand zones. And then later on in the video, I will be including how I use pivot points as well. So let's go ahead and jump right in. So first and foremost, here is a quick disclaimer because of course, I do want to make sure you guys are aware that I am no professional financial advisor, a trader, or a professional teacher by any means. I'm just a fellow retail trader who enjoys documenting my progress and striving for consistency in profitability. I received many requests to break down what I use, and I'm just sharing this part of my current strategy that I'm currently using in my journey right now. This may not work for you, and that is totally okay. I hope you're able to find the strategy that works best for you and your trading personality. Remember that what works for me may not work for you, or you may copy and paste my strategy and you might tweak it to what you need it to be, and that is more than okay. What I am going to be showing you will not guarantee positive results. It is just to be transparent on what I've been practicing the past few months that's working for me so far. So thank you for letting me read this, and let's get into the rest of the slides. So as I mentioned, the basis of my strategy falls on supply and demand zones. Now, I don't have the absolute definitive answers of what they are. This is all solely based off what I know. So feel free to do a little bit more Google researching to better understand all the technical terms, because again, I'm just sharing with you what I know and what I believe works for me. So for supply and demand zones, I consider them areas that contain high price orders that were placed by big institutions or banks, aka the big whales, right? We're just the little retail traders out here, and the whales are the ones that have multi-million, billion-dollar monies to be able to make a lot of movement in the market. For supply zones, they are basically resistance zones where the selling pressure is stronger than the buying pressure. And for demand zones, it's the opposite. It's going to be support zones where the buying pressure is stronger than the selling pressure. Essentially, with supply zones, you expect or would like to believe that these zones are so strong that when price starts to come into supply zones are usually at the top of the chart, those long boxes at the top of the chart, that you'll have a lot of rejection. So then the price can fall down. Demand zones is the opposite. It'll be at the bottom part of the chart, all those rectangles on the bottom. And you would expect, or at least hope, for the price when it goes down into the demand zones that it will bounce out and then have a bullish run upward. So there is some similarities between supply and demand zones. The first thing is there is continuation trades. So the two kinds of continuation trades where you'll have it either going to the upside or the downside is going to be first a rally-based rally, which is RBR, that is, rallying to the upside. It bases out and then it rallies up even more. Then the opposite, drop-based drop, moves to the downside. So let's say you have a drop down, it bases or it consolidates and then it drops down again. Then the other kind is going to be a reversal trade. So this is where it wants to have a continuation, but it actually fails to do that after it consolidates. So the first one is a break to the downside where it's going to be a rally. So we go up, we base or consolidate, and then we drop down. And then the opposite is going to be drop. So we're going to go down, we base or AKA consolidate, and then we rally. So break to the upside. Now, really, really important things for me when it comes to supply and demand zones is two things. First, it's going to be the amount of times a zone was touched, because the less times they have been touched, the more fresh and better quality these zones are going to be, especially with combining the second important point which is your higher time frames to determine how you chart your zones. So if there is for example, a 4-hour zone that has not been touched, I would consider that to be a very strong, higher quality zone. Compared to, let's say, a 5-minute zone that has already been touched once or twice, that is going to be very weak for me. So let's go ahead and jump into a few examples to go ahead and break down my strategy a little bit more and how I would read the chart with this. If you guys would like, I can also make a charting video to be able to explain how I chart my supply and demand zones, but make sure you go ahead and comment that down below so I can know that's what you want, or drop, some thumbs up on the video so I can see that this video was helpful, or if you would like to see a charting video. So anyways, with this first example, I'm going to be showing a larger time frame, and then the second slide will be showing the smaller time frame of the same area. So for this bigger time frame, all of them are going to be NQ1 exclamation point on TradingView. The first one is going to be the 4-hour supply zone I'm showing here, that you can see a rally base drop, right? So we have on the 4-hour time frame, we have a rally to the upside. We based within the 4-hour supply zone, right? Consolidated, and then we dropped out of it. And that wasn't the only time. We did it the first time, and then we did it for a second time here. Yes, this time we actually consolidated a lot more, and then we eventually dropped. We even dropped and we retested to come back in, just not enough gas to keep it going, and we continued the drop to the downside. If you look on the very high time frame like this, you can also see there was previous support zones. So if you were, trading, you could easily tell if we were rejecting this area, it could either support here again, or if there's enough momentum to the downside, you can see the continuation to break below the support as it did here. That is how I read the 4-hour, or at least the higher time frames. So with this rally base drop, this is a break to the downside. The next example, as I mentioned, it's just a more smaller time frame, so you can see a little bit more clear intraday what those trades look like. So here is what we're looking at right now. And this is the 5-minute zone showing the same thing. So for the 5-minute supply zone, this is what we were just looking at, just to make sure we're all on the same page. This big square is where we are right now. So essentially, as you can tell, we had the overnight push into that 4-hour supply zone, kept on consolidating, just not enough gas to push it through. We didn't even come close to breaking out of the supply zone. The only time I consider a supply zone or demand zone to be invalidated is if more than 50% of a candle body is outside of it multiple times on the 5-minute frame. On the larger time frame, if it's invalidated 50% or more of at least 1 or 2 of the 4-hour candles to invalidate it, in my opinion. So let's go ahead and go into this 5-minute supply zone. Closer look compared to the previous slide. I use the lower time frame, such as the 5 or the 15, even the 3-minute for my entry. And with my entry, you can actually see intraday very clearly that a wall is being built up here since the overnight session. So here we are, from the 3 p.m. Pacific Standard Time open of the market, we pushed into this zone. We kept on consolidating. We had a very large wall, could never break through. Market open, we fell short of VWAP, came back up to do a retest back in the same 4-hour zone, just didn't have enough gas. And then we are continuing to break this overnight low as well as the previous, or the market open right here. And then we broke it and we continue all the way to the downside. So that is how I look at this frame here. For the next one, it's an example of a 4-hour demand zone and how I see it. So I did draw this 4-hour demand zone actually a while back. I want to say maybe it was a month or so ago. And finally, we came to retest it. So on this specific example here, you can see we have a drop-based rally. So we have a drop, right? We based out a little bit in the 4-hour demand zone, consolidated in the demand zone, and then we eventually rallied out of it. So we're breaking back up to the upside. And then going into a smaller time frame, of course, to show you intraday how it looks like. You can see that the overnight session, we had that drop. Coming into pre-market and right at market open, we were just basing, consolidating, and eventually we were able to rally out of it, right? You can see that a lot of support was being built up intraday, and we pushed out. Now, a really cool thing too, as I was mentioning earlier, is when it comes to seeing an invalidated zone. you can see we had a lot of wicks, right? But it was not 50% or more of the candle body that was closed outside of it. So that's why I consider this zone to still be pretty strong. Now, granted, it's still a little bit weak because we have already been within it a couple of times. We based out of it a couple of times. We broke through it a few times. So it's a little bit weaker than we would like it to be. But essentially, it's not 50% or more of the candle body. So it's still a valid zone for me. Now, moving on to pivot points and how I incorporate them with my supply and demand zones, I believe that with supply and demand zones and pivot points, when they actually align to the very T with the pivot point within a zone, or at least at the entry or exit of a zone, it is super duper strong. I have such high conviction when this like literally pairs up. So I will be showing you an example of that very shortly. But how do I use pivot points, right? So for pivot points, once the market direction, like the daily bias or even the weekly bias is determined, that can help me a lot with my entries or exits using pivot points. I've noticed that at least one of the pivot points is touched throughout a trading session. Now that could be London, so the overnight session, or that could be New York Open or Power Hour, whatever session you're trading. It usually touches the pivot point at least one time. I've also noticed that pivot points are tapped or broken through between 5 to 10 points. And this is specific to the NQ because, as I mentioned, those charts, they're all NQ1 exclamation points. I only trade the NQ, so that's why the whole slide or this whole presentation is based off the NQ. And as I mentioned, S&D zones combined with pivot points together at the same time, it's absolutely ridiculous. It's super strong in my opinion. So how do I categorize my pivot points? Because it actually changes when you have different time frames. The first category is going to be the 1 minute through the 15-minute time frame. And that is because the pivot point duration is 24 hours. I usually use this first category to determine my intraday or at least end of day targets. For the second category, it's the 30-minute time frame through the 4-hour. And that's going to be the duration of one full trading week. And that's from Sunday market open to Friday market closed. And I use these time frames with pivot points to determine my end of week targets. And if you do follow me on TradingView, which is linked down below in the description, I haven't posted as often as I used to, but I do include my end of week targets usually, and they are based upon my weekly bias. And then after I incorporate my pivot points to help me determine what would be a rational idea, especially if they align well with my supply and demand zones. And then lastly, for the third category is going to be the daily time frame. That is because the pivot points last for a full month from the 1st to the 1st. So if it's January 1st to February 1st, the daily time frame will show the pivot point for that whole month of that. Or if it's March to April, that's March 1st to April 1st. You get the idea. But let's go into some examples, right? So this is going to be the 15-minute time frame. And as you can tell with the 15-minute, as I just mentioned for category 1, the duration of pivot points is for a full 24 hours. So from market open, market close the following day. My first example is this orange circle right here. You can see that from overnight, we obviously had, a little bit of sideways action, nothing crazy. But let's say, in the moment, obviously I've cherry picked a lot of these different examples to be able to show you, how my strategy works essentially. So that's why I mentioned in the beginning, no guarantee of profits or anything like that. But all these examples are cherry picked to be able to best explain the strategy. So anyways, let's say that you knew that you can confirm the daily bias was bullish. Awesome. You entered right here, but you weren't quite sure where you should have your exit, right? Well, you can definitely use the R1, which is this one right here at 15,092.75. This could be your exit because, again, you're not quite sure where to go and the bias is for sure bullish. You can just let the trend ride all the way up and exit right here. Or let's say you have more of a short bias, depending upon what you see in the market. Let's say you get into an entry right here for a short. And at this point for your exit, you could consider to use your pivot point P at 14.9K, or you can use the VWAP as a way to exit because you can see we're very overextended off of VWAP and that would be a nice retracement down. So there's two ways that you're able to use this first example as a means to enter or exit a trade intraday. For the next example is going to be the same screenshot, but it's the following day, right? So then our pivot points are going to be different. As you can tell, pivot point P was 14.9K here, and then it moved up for the next day at around, let's just say 15,000 flat. But for this specific example, you can see that using the pivot points, you can use it as a means to have possibly support or resistance. So for this 15-minute time frame here, you can see that R1 was in a very similar place. So when I see that, it means, okay, that might be an area of possible resistance, as the previous day we obviously rejected, we couldn't quite break through. So I want to see this as maybe some resistance, and depending upon, the news we get, depending upon, what kind of price action we get with the market liquidity and all that stuff, then maybe we might be able to break through it. Or in fact, we get so much rejection, we break to the downside. Maybe we go for S1. So let's go ahead and okay, perfect. Sorry, I just wanted to make sure we're on the right track here. So the first time, let's say you knew that we had that same area of possible resistance. Okay, great. Maybe you haven't even taken a trade yet, but you are expecting for resistance. At this point, I probably would have taken a short because of the day before, as I mentioned, resistance, taken a short here, played it down at pivot point P, because P is usually, I consider that almost like point of control. It's not always accurate, but usually pivot point P is like the middle of that day. So because it's so closely, found between R1 and pivot point P, I can use that as a means to exit this quick short trade, or again, having it as a short trade to VWAP because we are quite extended here. Now at this point, you can also see that the previous day we had so much support, right? Based on this 15-minute time frame, that's 1, 2, 3, 4, 5. Let's just say that's about 6 times really close, even these little ones in between. We have never quite broken beneath this. So I would have a support line drawn up right here. Okay, if we do break below this, I can expect maybe a move to the downside coming towards S1, or even 14.9K from previous day because they're so close. Or if we do bounce off of this support area, something close to it, or even the overnight low as we did here, we might have a push to the upside. Now imagine that happened. Well, in this case it did. Then you can go ahead and have an entry when we do have indication of pushing to the upside, right? At this point, using part of my VWAP strategy, which is when we're overextended, using overnight low, pushing back up to retest VWAP, you can see we obviously used that kind of strategy and we pushed off pivot point P. We broke through what was the resistance, and looking on the next slide, you can see that we went all the way up to R2. Now, a really cool thing too is that when other confluences match up with your market trend and your bias for the day, and when you have news, it can ultimately keep on pushing you through different pivot points. As I mentioned in the very beginning, at least one pivot point is touched throughout a trading session, right? I'm going to go back just to show you that I have that here. And you can see that, at least with my first example, this is intraday, we have the first touch, right? The second day, we have 2 pivot points touched. Matter of fact, we have 3. Then the following day, I actually don't see it, but I believe we do have a touch right here, regardless. So that's why it's really cool to be able to note that pivot points are really great for entry, exits, even guides, to be able to know where price may move to, or at least be able to plan a trade during those pivot points. Now, this is the best part when, as I mentioned, supply and demand zones, when they align perfectly with your pivot points, how strong they can be. Now, this is the 4-hour time frame. We're going to use the supply zones as our examples. But for this first example right here, you can see our pivot point R1 at 16,013. I'm going to go ahead and just say 16,000 for the sake of the video, make it nice and easy. But we had to push through it, right? We had a nice push through the 16,000 zone up until about let's just say 1650 for the sake of the video. And we never actually broke out of this 1-hour supply zone. I know I said 4-hour down here, but this is a 1-hour right now. We never quite broke it, right? So this is still a very valid area. But matter of fact, even when we tried to go over it, we quickly flushed down within that same 4-hour time frame, or same 4-hour bar, I should say, or candle. And we closed beneath our R1 target. Really quick, closed beneath it. We completely retraced this whole move that we had from the overnight session. And here we are now. So you can see that it's very, very strong, right? Being able to note that our R1 is respecting our 1-hour supply zone and making sure it stays below it. That's my first example. The second one is going to be right here. We talked about this in the very beginning of the video as one of my first examples. But essentially, we have this R1 pivot point at, let's just call this one 16,000, or I'm sorry, let's call this one 15.8. 15.8K, because I can't really get the exact number. But we have 15.8 here. The first time we pushed through it, but again, with the 4-hour candle, we closed beneath it, so we had quite the rejection. And following the second candle, came close, but we still had that drop. So with our 4-hour supply zone mixed with our one pivot point, you can see how strong it was, respecting not only the pivot point, but also the supply zone. Same thing here, same idea, same pivot point. We're able to still go ahead and reject. Even when we had that consolidation, the 4-hour supply zone was still holding steady and still respecting this R1 up until here. Yes, at this point, it could have maybe went up all the way to 16,000 at this new R1 target for the new trading week. But matter of fact, it wanted to come down to retest our pivot point P, because as I mentioned, at least one of the pivot points are touched per trading session. In this case, in the larger time frame, at least once per trading week. So really, really cool stuff to be able to see everything match perfectly. But that's going to be all of the examples to be able to explain how I use supply and demand zones as well as pivot points. I really hope that this video was simple enough to go ahead and follow along, and feel free to rewatch it if you like. But this really is the basis of my strategy. I do obviously include a few other confluences to build it to be what works for me, but feel free to test try this in a demo account if you want. Let me know your thoughts down in the comments section. If you do use this yourself, you've already been using it, or you're gonna give it a go, or maybe this isn't for you, because that, like I mentioned in the beginning, that's more than okay. But I'm gonna go ahead and end the video here. I appreciate your time and support. I really hope that this video was helpful in some way. As always, I wish you nothing but the best and most success in everything you do, and I will see you all in the next video.